Hello, everybody. Welcome to this week, and what a week it has been. It is really good to be back after missing last week, thanks to our little friend by the name of COVID. Yep. So I was down for about a week. For those of you who don't know, I missed last week due to COVID. I had gotten myself, well, actually, yeah, I just ran into it, and it took me out pretty hard. The funny thing is, I made it through the entire pandemic with, well, I did get two shots. I got my the initial COVID shot and the second one, but I never got any of the boosters. So, because I was just like, my immune system is pretty darn good. And well, COVID came along and it taught me a new definition of good. So, anyway, that was a fun week. I still have a little bit of congestion, a little bit of a sore throat still, but other than that, everything else is back to absolute normal, which is great. So today we got definitely a great show for you. We have all kinds of different information that's happened in the last week. Everything from, of course, we had a rate hike up here in Canada. We also had GDP reports in the U.S. So a lot of stuff on the recession front and the inflation front, of course. We got a little bit on the housing market, and we got a few things going on in crypto that we'd like to talk about as well. Hello, Jordan. It is nice to see you. Always love to see the people who are here like clockwork. And of course, hello, Redbeard. Gotta love Redbeard's worlds. Redbeard's World. So check out Redbeard on YouTube, or if you're brave of heart, check him out on TikTok. He goes a little bit off the rails, but for some of you, it may very well be worth it. All right, so we're going to talk. I guess the big thing that's on everybody's mind, of course, is that banana bread of a recession that they have in the States. Well, it's still not a recession. But let's just go over that very briefly. So as we know, in Q1, the GDP went down 1.6%. Interestingly enough, when they first announced it at the beginning, it was not quite at 1.6. They had a few revisions. So the number that we did get on Thursday, we may also get some revisions. Hi there, Trevor. It is great to see you. So what we've got initially is 0.9%. For Q2. If we run into similar revisions like we did with Q1, I wouldn't be surprised if we get up to maybe 1.2 at the end of the day. Now, there is a positive in that. One is that it didn't get worse to Q1, where Q1 was 1.6 down, only being down 0.9, or if it does eventually get revised a little higher, it's at least moving in the right direction. So the definition, of course, of a recession is that we need to have two negative GDPs in a row. And we're talking real GDP. So that's basically whenever you take a real reading of something, so whether it be real GDP, usually what it's doing is it's basically removing the baseline for inflation from it. But yeah, we've had it. But that doesn't put us in a recession. It is technically a recession, but it's not officially a recession until the National Bureau of Economic Research has called it. And so far, they have been mum on it. Now, I know that Joe Biden down there has been trying to redefine what a recession is. And I'm certainly not a fan of Mr. Biden, but they do have some points when you're looking at the overall economy in the States, and you actually look at the job market and the fact that they have record low unemployment. These are not things you normally see going into a recession. Does that mean that this is not a recession? No, it absolutely doesn't. It also doesn't mean that that we're going to get away with not going into a recession either. So keep that in mind. There's still a lot of stuff going on. Now, a lot of companies are starting to sort of treat it like a recession. And because they're treating it like a recession, you're going to start seeing some of these layoffs. Now, one of the side benefits of the layoffs is that that those people will have to start moving into all of these vacant jobs. So that might help with some of the labor issues. And at the same time, it'll also make the numbers look a little bit better in the labor market. So, and I think that's probably what's going to be the hesitation towards calling it a recession. My gut tells me that the National Bureau of Economic Research is not going to call it a recession, but that people and I think a lot of businesses are going to treat it like it is a recession. And that to me, that's perfectly fine because that's kind of the way things work. So that's kind of the whole thing with the recession. The other interesting thing about this is that number, that GDP number came out. And I'll tell you, I know a lot of people who were thinking the market was going to go bananas. And they were right, but they were right in the wrong direction. So the market actually was very, very strong. We had a nice green rally this week, led, of course, by tech. And when we actually get a little bit later, we're going to talk a little bit about some of the earnings reports, and those earnings reports really powered the week. They powered the week, gave us some really good green numbers, and one of my favorite stocks up here in Canada actually had a fantastic earnings report. So we'll talk about them a little bit too. Now, of course, speaking of Canada, we also, we had our CPI, but that was last week. I guess we're not talking about Canada. We're still talking about the U.S. So the Fed down in the U.S., they also raised, of course, their prime rate on Wednesday, and they went with 75 basis points, which is interesting. There was a lot of people were thinking that they might go to a full 100, so a full 1%, but they didn't. And it's interesting too, the market itself had priced in 75, and that's partially helped really big time keep things in the green, because when the stock market knows what's going to happen, and when I say the stock market, I'm talking about all of us investors. When we know what's going to happen economically, it gets kind of worked into the market so that there's no surprises. And when there's no surprises, the market tends to be a lot happier. Whereas if when the Fed had met on Wednesday, if they had come in and let's say they did something crazy like a full 125, that market would have absolutely plummeted. We would have been looking at some incredibly great buying opportunities. So keep in mind that didn't happen. Everything has been happening. There's been no surprises. And as long as there's no surprises, I think the market's going to remain probably strong into August. Because right now, even in August, like the Fed takes August off. So not that when I say takes it off, what I mean is they don't actually have a meeting in August. So there will be no rate hikes in August. August is pretty much just, it's like on Monopoly when you land on free parking. That's August this time around. So there is a chance that without there being any major surprises or any major hurdles, there is a chance we could actually have a half decent August before the market gets probably September. The market will be back to the red, back into our normal bear market behavior. So we may have a little bit of a respite for now, but keep in mind that it is temporary. So when you're looking at the market and you're starting to think, is now the time, to buy? Well, no, the time to buy is when everything is in the red, but don't be thinking that that you're going to be able to ride things up yet. You may get a little bit of a bounce up. You may get some opportunity to maybe rebalance some stuff. If you can get some stuff back up into profit, things that perhaps you don't want in your portfolio anymore. So we got a little bit of stuff going on that way. So that's pretty darn cool. Whew. So how have you guys been feeling about this market? Seeing all of this green, does it make you feel, as an investor, I know myself, even though I know when it's in the red, that's when I can buy, that's when I can be making some serious cash. But you know what? When I see the green market, it's like It's like being a kid getting up on Christmas morning in a way. It's like, because you feel really good about that. That's just fantastic. So that's a little bit, anyway, that's really, we're not going to dive too much deeper into the Fed and into the rate hikes, because we got a lot of different stuff that we can certainly talk about. And keep in mind too, even though I bring the news to this week, you guys can bring up whatever you guys want to. We will certainly talk about anything and everything. That's the beauty of a live stream. So keep that in mind. Now, my next topic actually is a little bit about the housing market. So, what the heck is going on? Well, there's been a report that's come out by the Royal Bank of Canada, and they are anticipating a 12% drop in housing over the next year. And if they are right, this will be the biggest drop in housing prices in about 40 years. 40 years. That's a long time. So, that could be good news for some home buyers. Well, yes and no. And hi there, Jill. It's kind of the double-edged sword. Like, obviously, the reason that this has happened is because people are not buying houses. In fact, sales are expected to drop 23% this year and then another 15% next year. That's with sales. And that, of course, goes back to the rate hikes. Obviously, if you're paying a lot more interest on mortgage and you're not able to get in at a good starting position, that's going to push a lot of people away from the real estate market when it comes to buying. And where is that going to push them? Well, of course, it's going to push them into the rental markets. And that's one of the reasons we're seeing insane increases in the rental price, and the prices of renting right now. Like in Toronto in the last year, they have seen on average a 20% increase in rents. That's a lot. Think about it, 20%. Now, keep in mind, when you have a number like that, 20%, that sounds really high. And you might be thinking, okay, but wait a minute, Candace. There's a lot of people who have rent protection. They can only raise rent so much. So how are you getting this 20%? Well, what's happening is new places, or if somebody moves out and then the landlord comes in, fix things up a little bit and just absolutely jacks that rent up. So that's where all of the heavy numbers are coming in to pull everything forward. And hello, Bonnie, it is good to see you. And we got a Redbeard here. Do you think China telling the U.S. not to play with fire or get burned in regards to Taiwan will have an impact on markets? It depends on if they follow through, to be honest. I think the thing about China is very much, they're like that. Have you ever, when you were a kid, if you ever went to the playground, you know how you got that one mouthy kid who just, is all mouth? In a way, China's a lot like that. They like to, it's from everything. Like, okay, we're going to ban Bitcoin, or we're going to ban this, or, if you do this, we're going to do this. I don't think China would be bold enough to follow through on what they were saying in regards to Pelosi if she comes to Taiwan. Of course, I don't know if Pelosi will actually do it either. I think we're looking at a little bit of propaganda on both sides. Unless an actual something happens to develop this, then I honestly don't think it's going to impact the markets. But it'll be interesting to see. I think it's just a little bit of rhetoric. Eventually, China will eventually come for Taiwan. This is a downright certainty. They see Taiwan as being part of China, and they will come for it eventually. Will they do it now? I don't think they will. I think economically, China is still recovering well from, all of the supply chain issues. That has hurt them a lot. And I've got a few things as well about chips that are going to hurt China as well. So I think China is probably not wanting to add any extra to the pain that they're already in, at least economically, because that to me just seems logical. So I don't think you're going to see China make any kind of a movement or push. They'll, of course, they will have the rhetoric, propaganda that will be on absolute 100% full speed forward. All right. Now, some interesting crypto news. I know lately crypto has been kind of news-wise, it has been a little bit dead, but now there is actually some interesting stuff that is happening. First of all, let's talk a little bit about, and just a sec, freaking Oracle, look at you, spoiler warning. Yes, that's what I was going to talk about. I have that on there. And yeah, it's absolutely going to be interesting. The world, the whole politics of the world is absolutely fantastic. And here's Brian. I love Brian. He is awesome. All right. So, Coinbase. So, one of their ex-product managers, as well as two of their employees, have actually been charged with insider trading. So, there was about, I believe it was 12 to 24. It might have been 12. I think it was 12 coins that were on their platform that had not yet been released on the platform. And they were already starting to sort of dig their hands in it and making some money from it. That's the reason that they're looking at insider trading. Now, the SEC considers those coins to be unregistered securities. And, so that's kind of interesting. You'll notice as well, SEC, I think they're getting to that point now that they're starting to name coins that, for example, they're considering to be securities, and you're going to see a lot more of that. The interesting thing, too, is when the SEC leveled these charges against these three individuals, the stock price of Coinbase, it dropped by 21.08% right away. So this is definitely having a little bit of an impact. And the crypto market, especially exchanges lately, they've had a lot of negative press, and this is not helping. Now, an interesting little thing, everybody's heard about FTX. So FTX, they were looking at Celsius at one point. They're right now propping up BlockFi. So without FTX, BlockFi would pretty much be in the same situation that Celsius is in right now. Now Voyager Digital, with Voyager, they've been looking at Voyager as they've lent them money to sort of help keep them alive, but now they've gone into bankruptcy. So it's no wonder to know what's going there. And they actually, when they went into bankruptcy, FTX offered to buy them. Interestingly enough, I think Voyager looked at them as being bottom feeders, and that's kind of what FTX is kind of doing now. FTX is after another Canadian company. They're looking to acquire Bitvo. And with the successful acquisition of Bitvo, that will get their foot into the Canadian market. So it's really interesting how FTX is just positioning themselves and gobbling these people up that on the other side of crypto winter. FTX is probably going to be in a good position if they've survived. And the fact that they're buying everything that they can, they've definitely got some very deep pockets. So it'll be interesting to see what FTX does next. Now, of course, speaking of crypto as well, we've actually been seeing some really interesting things. And there's one thing I wanted to touch on with Bitcoin. We found out that Tesla has sold 75% of the Bitcoin off of their balance sheet. Now, here's the interesting thing. If anybody remembers months and months ago, back when crypto was still doing good, one of those worries that everybody had was if Tesla were to sell some of their Bitcoin, that it would absolutely tank the price of Bitcoin. Well, interestingly enough, when Tesla sold 75% of their Bitcoin, it did nothing. It was basically a giant nothing burger. So nothing happened to Bitcoin. Bitcoin has just moved along nice and sideways while that was happening, and now it's begun climbing a little bit. So what does that indicate to me? Why did we not fall? Well, one reason we wouldn't fall is if we were actually at our bottom. That's one possible. Now, keep in mind, this is just 100% speculation, but I logically think that might be the situation. Now, if that's the situation, then we're looking definitely at a good time for buying in if that's something that you're interested in doing. I'm just sitting back. I've already got my, my Bitcoin sitting on a hardware wallet, waiting for whatever happens. Now, keep in mind, though, too, you have to be realistic. A lot of money was printed by all of the world governments. A lot of that money ended up in crypto, and a lot of that money is now absolutely gone. And that's the way the economic cycle works. So to get ourselves back up, if we want to get to like 60,000 again, or 70,000, or we want to start heading towards 100,000, we're going to need money to enter that system. We're going to need, I believe that we'll need some institutional investors coming in. We've just lost some institutional investors with Tesla. So I think that'll be very interesting to see how that rolls out. And I honestly think until we get a little bit of more regulation, we're not going to see a lot of institutional investment into Bitcoin. And I think a lot of the institutional investors right now are a little bit nervous overall on the entire crypto market, especially when they've lost. Like, you take Celsius. There was a pension fund, I believe it was in Quebec. I could be wrong on that, but I'm pretty sure it was in Quebec, that had a significant amount of Bitcoin. It was either Bitcoin or crypto. I honestly don't know, but they had a significant amount of crypto on Celsius. So probably Bitcoin, though, the more I think about it. Now, what is good is that the way bankruptcy does work is that a pension fund like that, where you're a bigger fish in the pool, you have a better chance of getting some of your crypto back than just regular Bob and Doug down the street. They're not going to get their crypto back. So one of those things to just keep in mind. But that's what I have this week, at least on crypto. And the friggin' Oracle has some data for us. So yeah, Tesla sold 42,000 Bitcoin. So they sold 42,000 Bitcoin, and it barely even registered as a bump in the road. So tell me that doesn't say something to you. Please do, because it says something to me. And what it says to me is bottom in. But keep in mind too, I could be wrong. That's what it says to me. So you got to decide what it says to you, and then sort of go with that. Let's talk about Rogers. I'm not a huge fan of Rogers, to be very honest. And let's see here. Friggin' Orca says that it was a drip in the bucket. Yeah, it was. But I think the biggest thing with Tesla is just the fact that it was Tesla that did it. And it also shows, too, that I think we're at that point now with Elon that he doesn't really have the power to move the market. I think that his days of, causing hysteria on the market is pretty much a thing of the past, which I think is a great thing for the market, because you don't want one person to be able to just come up and tweet and completely wreck, the price of an asset. That is, nobody should have that much power. So that's interesting. But here's another thing too. Look at this. They bought in the 30s and sold at a loss in the 19s. So yeah, we now know that Tesla is one of those folks who likes to buy high and sell low. That's not a way to invest, folks. Please don't do that. Don't follow Tesla's example, whatever you do. Okay, Rogers. Rogers had, of course, that big outage. I'm sure everybody's heard about it. So I know the Canadian government has pretty much put the three on notice that they have. Right now, it's probably about 40 days left to find some kind of a way to set up a forwarding system for 911 to another carrier. Because when Rogers was out, people who needed assistance in some cities were not able to get 911 to work. And that's kind of a big issue. Now, Rogers, of course, is saying that they are going to take care of their system and make sure an outage like this doesn't happen again. Well, eventually. They've got a 3-year plan. So they're investing about $10 billion over the next 3 years to prevent these outages. One of the things that they're going to do, and this is smart, this is actually smart, is they're going to separate their networks. So their wireless network will be separate from like their cable network, which is kind of a big thing. That was one of the big reasons why both sides went down. And they claim that this whole thing was because of a coding error. It's like a frigging coding error. They should have still been able, even with a coding error. I've been in tech, and you know what the number one thing they always taught me in tech is that if you're going to make a change to a system, make a backup first. So if all hell breaks loose, you can just roll back in with your backup and everything is fine. Well, obviously that did not happen here. So I can't tell you why, because I don't know how they didn't manage to have a backup or a nice way to fix something. A simple error should not be able to take down a national system for pretty much a day, and in some places more than a day. So to me, that's just absolutely outrageous. Now, when it comes to Rogers as well, they have been given an extension on the whole Shaw deal. So when they were looking at the merger of Shaw, there's always a time limit on these. So that time limit's now been pushed to the end of the year. So they've got to the end of the year to get their ducks in a row. And we still don't know if this is going to happen or not. Even with selling freedom to Quebecor, we don't know if that's going to be enough. I know that there are still a lot of resistance to this deal when you're looking at the competition boards. So this is going to be an interesting one. And I would not bet on this deal. It may go through, but I would not bet on it. I think especially after everything that happened with this outage, if anything, we don't need fewer telecom companies in Canada. We need a few more. We need some more competition. And if we could actually start increasing some of the competition in the telecom system, that would also go a long way towards bringing some of these bills down, because Canadians are paying outrageously for their cell phones, for their cable. Like you take when your cell phone and your cable, is almost it's almost 50% of your rent. That's outrageous. It shouldn't be that much. So if you ever want some giggles, just go on any one of the American sites and look at some of the prices that they have on their telecom packages. And then, it might make you cry a little bit, because then you have to come back to Canadian reality, where we're paying more than we really should be. So that's kind of the sad thing when it comes to Rogers. And, I just don't know. I just don't like Rogers. I try to be unbiased on this channel, but Rogers just rubs me the wrong way. I've never liked them very much at all. But, all three of them, the way they all work. And here's the funny thing. They had some great cell phone deals one year, because I think it was around Christmas. It was maybe 3-4 years ago. What would happened was one employee at one of the three big telecoms released this insane deal. And I can't remember exactly what the terms of the deal was, but this was before you could get unlimited. But it was like something like a 20 gig or something for like, under $100. At the time, it was just absolutely, it was like, I think it was closer to $70. So it was absolutely a great deal. So this one employee went and just released it on the site. It was not supposed to. It was never supposed to go out. And once that one company did it, enough people saw it right away, and people were all over it like flies on rice. And as soon as that happened, the other two telecoms had no choice but to do the same thing. And that became really interesting. If you remember on the news when this had happened, there were people lined up for blocks outside of telecom stores to try to get in. If you had called in, then Some of the wait times were like 4 or 5 hours. And leave it to the friggin' Oracle to know who started it. So as he said, I think it was TELUS, then Bell, and then Rogers follows. Yeah, I know it wasn't Rogers at the time, but so yeah. And that just became an outrageous thing. They all sort of saved grace by making it into a limited time holiday offer. But yeah, that just sort of goes to show that, there's sort of, the three of them are all thick like thieves, and what one does, the other does. And that's how they've been able to keep prices high, because none of them are going to lower their price, because they know that the others would just do the same thing anyway. So why not milk Canadians for as much as they can get? And they do that. They love to milk. They should be part of the dairy system. But anyway, that's Rogers. That's all I want to talk about Rogers. I don't want to give them any more time on this broadcast. Well, unless you guys have questions about Rogers, then I'll give them more time. But let's talk about somebody a little bit less evil. Let's talk about Russia. Oh, okay, that was really bad. I apologize. But so Russia gas. As we know, they had that one pipe that was down for maintenance for 10 days. Now, they did turn that back on, even though I think Germany was thinking it wasn't. But now there's been a 50% reduction in their Nord Stream 1. So that's a lot of, 50% less gas. We've already got a gas and oil shortage over in Europe. So this is not a good thing. Now, in response to this, of course, the EU has had to basically look at trying to cut their overall usage of gas by about 15%. So it's not great over there. That gas shortage is a real issue. And that's going to be very interesting. Now, this current 50% shutdown, a Russian company who runs that Nord Stream 1, they're saying that it's just, turbine holdups. That's what's causing the issue. But we all know it's basically Russia just flexing a little bit back against the sanctions that are currently on them. So I don't know how this is all going to go. I know that we wanted to get food, and they had signed an agreement with Ukraine to let them send food through a northern port. I think it was Odessa, and pretty much as soon as Ukraine started sending their food up there to ship it out, Russia then hit Odessa with some missiles. I'm like, what the heck? It's like it's almost like, hey, yeah, this is the safe place. We'll leave that place alone, and then you just wait for that place to fill up, and then you hit them with missiles. So anyway, that is what's going on with the food. So, and I've got a bit more to talk about with food. First of all, I think 2 weeks ago I mentioned about some of the record profits that some of our grocery stores are making. So, and it's actually absurd. So when you look at Loblaws, for example, right now, month over month, you're paying about 8% more for your groceries when you go into Loblaws. Well, did you know in Q1, Loblaws is enjoying a 40% boost in their profits? So that is absolutely insane. And this is one of these things that is starting to cause a lot of feathers to get ruffled. There have been calls to get legislation involved to sort of nationalize some of the rules around the grocers. So it's going to be very interesting. So one of the interesting things is they do believe that a national standard could go a long way towards strengthening Canada's food supply chain, which would be good. Taking you to Timmy's with us. Yeah, Timmy's the new grocery store. Yeah, we'll all live off of Timbits for a while until all of the craziness goes away. But that would be interesting. Now, the food sector basically has to get this figured out by November. If they're not able to come to some kind of an agreement to create some kind of a standard system within it, then we're probably looking at the legislature. So, the Canadian government getting a little bit involved in that. So we'll have to see how that turns out. We certainly can, and we've got more about. We're going to talk a little bit about fertilizer a little bit later. So we do have more in regards to groceries, but I did want to touch very quickly on tech. And the freaking Oracle's already spoiled this, but down in the US, they have actually passed an act called the CHIPS Act, which is kind of funny. Anytime I hear chips, I think of that old 70s show, with the motorcycles. So, anyway, I'm not going to do themes because I'll probably get copyright if I were to actually hum a theme on a live stream. I've actually did see a video once where somebody, they did the mission, they were doing a couple of reviewers, they did the Mission Impossible theme only using the words Tom and Cruise, just saying it in such a way to the theme, and they got copyright. They got copyright struck for that, and I was just like, seriously, wow. But basically what the chip thing is happening. So with this CHIPS Act is we're looking at subsidy to American chip makers who make their chips on American soil. So this is to try to take away, well, one, it's going to take away a lot of the chips that are made overseas in China. So this isn't going to be great for China. Now, this is not going to solve the chip shortage overnight, because even if we start to give somebody subsidies, some of these companies have to get themselves tooled up and ready and get into production. So this is going to be something that it's like buying a bunch of stocks. You don't get your dividends till later. Same kind of idea with this. So we got to give it a little bit of time and let it come to fruition. So another interesting thing too, and I mentioned too about earnings. There's a friggin' Oracle mentioning Poncherello. Yeah, good old shows of the 70s. I was just a child, but I can remember everything. So, and we have an Edward in the house. Woohoo! Welcome aboard, Edward. Always gotta love Jungle Eddie when he's in the house. All right, earnings reports. This has been a big week for earnings report. So a lot of the tech ones have come in, and from the way these earnings reports actually ended up coming through, this is what's really caused a huge green wave within the NASDAQ, and that's been helping to power up a lot of this green that we're seeing. So, Apple, they beat their expectations. Now, Apple is still warning, even though they beat their expectations. While they're smiling on one side, the other side, they're basically saying, yeah, but there's a slowdown coming. And it's true, they don't have the chips. They haven't been able to place the same amount of orders or expectation for orders, like for the new iPhone, for example, because they just don't have. And that supply chain is getting right in the way. So that's kind of an interesting thing. Amazon also beat expectations. And then they went over to Europe and they said, oh, yeah, you guys all have to pay more for Amazon Prime now. So, it's kind of one of these situations where there's good news, bad news at the same time. McDonald's also beat expectation. And then they went over to the UK and raised the price of the cheeseburger. Yeah, they actually did that. No lie. So that's kind of funny. Coke also beat expectations, so Coca-Cola. But at the same time, their prices have gone up to, compensate for inflation. So, and a lot of these companies, their prices are all going up. We all know this, so I think that's a given. Now, Alphabet actually came in slightly lower than expectations, so they didn't do so well. Now, on the Canadian side, we had our good old one of my favorite stocks, CNR. I love CNR. Do your due diligence if you're interested in CNR, but they shattered expectations. They didn't just meet them, they didn't slightly beat them. They absolutely shattered them into a pile of dust as they came in. Well, they came in with a revenue of 4.34 billion, and that was 21% higher than this quarter last year. So they were up. They beat their expectations by about 4.32%. That's just absolutely fantastic. And if you guys saw when the CNR when the CNR earnings came out the other day, the graph was a straight line up. So it was, it was a nice little thing. And I will tell you, I was a little bit over diversified into CNR because I, big fan. So I did take that opportunity to sell a little bit of CNR just to get my share down a little bit. So I did, made a little bit of money and put it into some nice blue chip dividend stocks. So, I'm happy about that, but very happy about CNR. Love CNR. Definitely a company that if you haven't looked at, take a look at it, folks. Do your due diligence. It is a recession proof. I've got a video as well on the channel on CNR. All you have to do is just type in, do a search on CNR and recession, and it will come up. So check that out if you haven't seen that one as well. It is absolutely a fantastic company. CP also had their earnings come out. They didn't do as well as CNR though. But keep in mind, CP Rail, they just did that whole thing with Kansas City. So their numbers are going to hurt a little bit because of that. And I think that's why they didn't have such a great quarter compared to, of course, CNR. The freaking Oracle says made in USA price will be higher, possibly inside. Yeah, and I think he's talking about the chips again. So yeah, it'll probably cost a little bit more. It's hard to say how it'll work with all these subsidies and not. Now, before we get to the rest of the news, we also have, I have one little thing. One quick little tidbit on the economy first. So there is a group, they're called the International Monetary Fund. Now they track, how we have GDP in different countries, so your gross domestic product. They calculate it on a world scale. And they're expecting it to slow down to about a 3.6% growth between 2022 and 2023. So both of those years. So they are seeing a definite slowdown right across the world. And their number one key driver to that is the war in Ukraine. So keep that in mind. That could be what's going on there with a lot of that. All right, now, what in the banana bread is going on with Elon Musk? So we got a couple of stories on Elon. One of them is just really, really bizarre. We may not, I didn't even want to bring it up, but we'll bring it up just because it's weird. But the first one, it has to do with Twitter. So September 13th, Twitter shareholders are getting together to do a vote on Elon's takeover bid. Of course, they're obviously going to approve it, even though that this whole thing is in legislation. And some of the initial findings with the speed of the trial is not looking very well in Elon's favor. And I think Meet Kevin did a really good video on it, where he sort of talked a little bit about some of the precedent in the state where this is being tried. How some of the precedents in their court system there are not favorable to Elon. So we'll have to see. I have a feeling he's gonna have to buy it, but I think Elon's really smart. So hopefully, he's got himself a backup plan, whether it be to sort of see if he can knock the price down just to make it go away for Twitter. Maybe they would. Maybe they'd be happy with that. I don't know. But we'll have to see. So now the other really weird Elon story is this whole thing about his affairs. So this is the story that I read. So his ex, Bree or whatever her name is, apparently he's been accused of sleeping with her girlfriend, and nobody knows who's actually leaked this information out, whether it was Bree or whether it was somebody else, but it sounds really, really hokey. And there's been a whole bunch of really weird stuff on just things that Elon has been posting, about himself on Twitter. And some of it's a little bit almost depressing. It's like, So I don't really know what's going on with that, but there's a bunch of weird stuff happening in Elon's world, and that's probably completely normal for Elon. Hopefully next week we've got something a little more solid, because I really don't care about whether Elon had an affair with his ex-wife's girlfriend, or however that all works out. It's all craziness, and it really has no, to me, it has no real implication. Unless it's a situation where he's got himself so caught up in stuff that he can't do his job. But I think Tesla can run on fine without him. He's more of a figurehead at this point. So anyway, that's Elon. So speaking of crap, let's talk about fertilizer. Okay, that was weird. Anyway, now we did. If you guys, any of you guys watched the Danter Banter or Crypto Night in Canada, depending on which one it is, I think we touched a little bit on fertilizer on that show last Wednesday. Now, what's going on with the fertilizer is that the federal government, they want farmers to cut fertilizer emissions by 30%. So, people were talking, I know when they were talking about it on Crypto Night in Canada, it was more or less, well, plants need nitrogen. What's going on? Well, what it basically boils down to is when you're dealing with fertilizer, there are some emissions. You're looking at carbon dioxide, and that's, of course, one of the big ones. And the other one is nitrous oxide as well, so N2O, that also gets released. And those are both gases that are greenhouse. Now, what the Canadian government kind of wants to do is they're kind of going for that zero carbon emissions by 2050, and they're just sort of holding on to that religiously. Now, the problem is, to reduce fertilizer emissions by 30%, farmers are left with a couple of options. One, they can grow a lot less food. That'll do it. Or two, they can buy some very expensive equipment. Maybe, it might cost them $50,000 to, upgrade a lot of their stuff so that they can reduce those emissions. Either of those is really not a great idea at this point in time when we have a food shortage, a worldwide food shortage. So this is one of these situations where, honestly, the government needs to sit back and perhaps, just let things go for now, because, as much as we want to save the environment, or, I suppose with this government, they could probably just buy all of the equipment, but once again, that would just cause more issues with the economy. So it's very interesting, this whole issue with fertilizer, and it also goes beyond fertilizer. It also is going into our oil and gas industry, because there's also all kinds of caps that they're looking at for oil and gas emissions. So there's two different strategies. There's something called a cap and trade, or just simply charging a whole lot more for carbon. So raising your carbon prices. Now, both of these are really not that ideal, because what they're going to do is, they're going to make capital want to flow to countries where they don't have to pay as much when it comes to cap and trade or, steep carbon prices. Now, when it comes to at least the oil and gas industry, the details on what the government plans to do, those aren't going to come out until about 2023. So sometime next year, we'll find out about that. So there's at least time on that. Make fertilizer the old-fashioned way. That's true. If you have your own home garden, you can make your own fertilizer. My grandma used to do that. Any organics that we used to have out, and also the ashes from the wood burning stove, would all go into the garden, and they would get all turned over constantly. We would be turning it over, and that garden was very healthy every year. It grew a lot of great stuff, a lot of great vegetables. So that way there, you have some issues, or you have at least something you can do. The freaking oracle says that way it's broken down and used by plants. Yeah. The only problem is that when you're dealing with an industrial, like when you're dealing with massive fields, you don't really have that as an option, because you're looking at bringing fertilizer in. And I think it's just the whole process of selling it into the ground where the CO2 is being released, or the manufacturer of the fertilizer itself. So I think what the government kind of expects them to do is that they just need to be more efficient with their fertilizer. But once again, it's a situation I think that's just not prudent at this point in time. It's like, yeah, we do have to take care of the environment. Yes, we do have to get rid of our try to do something with our carbon emissions, but it's one of those things that, we can't start starving the population just so that we can help avert another future disaster. What we need to do is we need to be smart. Like there's a lot of carbon capture technologies out there. That's something that we should be putting money into because, instead of having to kill the carbon, we can just capture a lot of it right at, a lot of gas companies, for example. So a lot of oil, like if you ever look at an oil well, one of the ways that they'll do it is they try to figure out how much carbon they're producing as they're pulling the oil out of the ground, and they will try to put that amount of carbon, like they'll capture it, and they'll put it back into the ground. So it's kind of an interesting thing when you look at carbon capture. And, and Jill says, whoops. Yeah, exactly. It's hard to do in a mass production. And the friggin' Oracle says it's a hoax to keep them in control. Well, no, climate change is not a hoax. I think by now, most people, you can see some of the things that have been happening. So, the science is there, but, keep in mind, science can beat a lot of the stuff that's going on. We just need to be wise with how we're going to combat it. I think we've gotten to the point that trying to cut emissions, yeah, it makes sense to make things cleaner. It makes sense to try to stop a lot of the crap that's being pumped into the air. But at the same time, I think we're at that point that we can't control a lot of the third world countries who are now moving, into industrialization, and they're getting dirtier. And it's going to be that situation where we need to look at, adapting to climate change, accepting it as a reality, whether it means that we have to build walls on the ocean, for cities that are very lowland. Like, so for example, in Vancouver, the delta part of Vancouver is most of it's actually under sea level. So, that's an area that would flood very, very easily with climate change. So we need to sort of look at a lot of different things. We need to look at, we can't let companies go willy-nilly, but what we could do is if a company wants to produce a lot of carbon, we could, instead of just charging them for it, we could have them fund some of the research that's going into carbon capture, and try to see if we can get a few things, a few things that will help us all out. And Jungle Eddie says, I would like to see emission limits based on output. If you are producing 100% more food or oil and are producing 20%, 25% more emissions, I think you are doing a great job environmentally. Yeah, absolutely. Absolutely. It's all about efficiency. Build better technology, build better filters for factories, and that will help. Absolutely. But we are at a point now that, they've been warning us about tipping points for so long. I think we've already passed a whole bunch of tipping points, to be honest. Let's just start dealing with, we're going to have to start dealing with what's coming. We're going to have to, just be prepared. And if there's any kind of technology that we can use, let's find a solution to where we're at now, and not hope to prevent something that it seems to be a losing battle. So, plant more trees. Not a bad idea. Not a bad idea. Part of the issue that we have is the deforestation of the rainforest. So that is not a good idea at all. All right, now I just got a couple small little things left. One is I got a metaverse story. So Meta was looking to purchase a VR startup called Within. And the antitrust regulators in the US are stepping in, and they filed to block that purchase. Now, what is big about this is that this is a company that Meta needs, so Facebook, that they need for the metaverse, because they're all in on the metaverse and they're losing big time. So This here is one of these companies that if this block goes through, it can absolutely hurt Meta big time. And it's kind of interesting to see that we're running into these type of issues with some of the bigger tech. And it also makes me think that it's going to be a lot harder for big tech to be buying a lot of these little companies, because I think right now the antitrust regulators in the US are on overdrive looking for anything they can stop. So, and so what is this? Look into Grove token, all about saving the planet. Yeah, I've heard of Grove. Um, Meta's broken. Yeah, Meta's in trouble. But keep in mind, I mean, with the amount of users and the amount of people who do still use Facebook, they've got a lot of good years ahead of them still. So if they can get this metaverse working correctly, um, they will definitely rebound. But it's not going to be an easy fix for them. All right. And the last thing I have is there was a little bit of information that came out about savings. So as rates go up, a lot of the banks, there's been pressure on them from their customers to say, hey, let's start raising up the interest you guys are paying us on our savings or on our savings account. And a lot of the banks are not doing it. Some of them are doing it, but they're not doing it like as a permanent, say, okay, yeah, we'll raise our interest at 1.5%. What they're doing is they're just creating little time limited deals. And some of these deals are to try to move people from other banks to see if they'll move over to them, because you got to keep in mind with the big banks, to them, the number one priority is, of course, making money for, of course, the shareholders. And some of us may be shareholders, so, but it is what it is. So the customer is usually the very last consideration when you're dealing with the big six. That's just a reality of banking. And they don't want, there's no onus on them to give you anything, to give you even a fraction of a percent more of interest. There's no onus. They don't want to. They'd rather give that to their shareholders, and those of us who are shareholders, thank you, bank. But so as a result, some of the banks, and the friggin' Oracle was mentioning, first 6 months, some of the banks have these nice little promotions. So if you come in, you can get, you might even, I've heard of a couple that were up around 4.5% for like 6 months. So they're looking at different ways to try to pull you in. Now, a lot of the smaller banks, like I know I've got EQ Bank's one that I use. They offer 1.6%. So they actually do give you a little bit more on your savings, and that's not like a limited time. They do move it a little bit based on the market, but right now I expect it to probably go up a little bit higher, because we've had that whole 1 point, and I find it takes a little bit of while for things to catch up in the finance world. So yeah, such as buy experience transfers on credit, and balance transfers for credit. Okay. All right, that makes more sense. I was trying to figure out what you were talking about in the other one, so I'm like, okay. So it is interesting to see that these are the type of things that are happening when it comes to these interest rates going up. They have no problem raising their lending rates when the rate goes up really fast. But, when it comes to actually giving money to their customers, they don't want to do that if they can help it. It's kind of a reality of the way things go. But what is happening, though, is that in the big six, savings accounts are disappearing nice and fast. Now, keep in mind, it's not all just because of somebody has a better option. With the prices of food and everything being so high, a lot of people are just being forced to have to use that money just for the basic necessities of life. And there's many people that have already burned through their savings and are now just piling up debt on credit cards, which absolutely is not great. Texting with bumps not working well. Oh, you're in the car. Okay, that makes sense. That probably means that as soon as this stream is over, Ken will probably have one going, or not. I don't know. Ken, tell us if you are having a stream after this, then people can check it out if they want to. So that's kind of a good thing. All right, so we're coming up on the hour. If you guys have any burning questions that you want to throw out, whatever it is, do so now, because that would be awesome. While I give you a chance to type any questions in, I'll point out, so again, a video coming out tomorrow. Tomorrow's video is all about royalties. So, and Ken does not have a show this afternoon. Okay. So tomorrow's show, all about royalties. So we're going to look at 7 royalty companies. Some of them are really nice. So definitely want to check it out. And I'll give you a hint. I am asked a lot about Pizza. Guess what? Pizza is a royalty company. They're going to be in that list tomorrow. So I'm finally looking at Pizza. So definitely check that one out tomorrow. Yeah, and Red Beer says the best thing here. Enjoy the rest of the weekend, folks. For sure. Thursday we'll be back again with another video. I'm not 100% sure yet what I'm going to do on that. I have to figure that out tomorrow. So I don't know what that's going to be. But you know what, guys? We got a Facebook page. The link is in the about information below. Join the Facebook group and come in there and just, if you guys want me to look at a particular company, throw it in there. I have every single, hopefully I haven't missed any, but I think I've done every single request I've gotten. So I always like to do that. Otherwise, I will find another company. I want to find a mid-cap company for Thursday. So that'll be kind of fun. Anyway, hopefully you guys are all enjoying your long weekend. Tonight's probably, at least if the sun's out where you are, perfect night for a barbecue, in my opinion. So, and look at that. Any thoughts? Right as I'm about to go, Jungle Eddie sneaks in a question. Any thoughts on Thomas Routers? That is not an easy answer. You know what? That'll be Thursday's deep dive. So there you go, Jungle Eddie. We will do. We'll do something. I'll either, if I don't do it on Thursday, I'll throw something up on the community tab for you. But either or, we'll touch on routers, because I think that would be an interest. I think that would be interesting. Absolutely. All right. Anyway, everybody, enjoy your afternoon. Enjoy your barbecue. It's great to be back, and I'll look forward to your guys' comments on tomorrow's video. That should be awesome. All right, everybody. It was fantastic. Have a great afternoon. We will see you all very soon. Take care, everybody.